Hey guys and girls, welcome aboard to this evening's Facebook Live. Lots of things to talk about. Obviously, the elephant in the room, going to get onto that a little bit later on this evening. And tonight, as I said last week, I've been asked to come on live and do short 20-minute Facebook Lives to give you guys good content, good energy, and keep it short and snappy. The elephant in the room is obviously the interest rate decision was today. Very, very interesting. Not surprised, but I'll give you my thoughts, give my take on that, and get to that shortly. So thanks a lot for tuning in. And today's episode, I had my team put this one together called "Waking Up from the Australian Dream." They call it the Australian dream because you need to be asleep to be living the life you expect to be living, right? Everyone says, oh, it's the good old Aussie dream. Everyone's asleep though, no one's awake. So today I want to talk about what the Australian dream looks like, why it's time to give up on the Australian dream, which is an article, the housing crisis set to get worse, the election 2022. My team wanted me to talk about the election, and I might give you some humor around that. And then we'll close off, which is going to be the main part of today's topic and discussion, which is the interest rate decision. So getting straight into the articles here, we've got the first one here, which is from our friends over at 9 News, right? And my views on the media. You can't believe anything out there, but let's look at the propaganda that's out there. Young Australians giving up on the property dream. Is this great Australian dream over for young people? The new survey suggests 2/3 of young voters have conceded they may never own a home. Now, generally, this is a time when the media would normally call Nathan up and say, hey, Nathan, do you want to come in and we'll talk about your property strategies, your property success, and, it turns into a political debate. I've been on ABC multiple times. Last time I walked out, I wouldn't go back on the ABC because what they were trying to do is set me up as some sort of puppet for some sort of Labor campaign. And, I'm politically atheist, and these things here, I can see straight through the mirage of whoever's in. And, I've got a few things to say about that. So I'm not going to deal with the crap. Survey conducted for 9 newspapers reveals 67% of young Australians aged between 18 and 34 believe that they will never own their own home in their area. Well, that's fair because, if you're living in an area, it's probably the urban sprawl and you've got to go out somewhere smaller, worse off and all that sort of stuff. Experts say the issue of home ownership will only get worse when a predicted interest rate rise comes into play later in the year. The issue of home ownership is shaping up to be a big election issue. Both Prime Minister Scamo and Albert Sleazy are campaigning that they will help ease the housing crisis. The government says it will expand its home guarantee scheme, which allows first home buyers to buy properties with a smaller deposit. Like Labor says, it will build 30,000 affordable homes across the country. Other big issues at the forefront include climate change and the cost of living. This is the propaganda that's coming out from the media. Reality is, if you go and look at all this election crap, I don't get caught up in it too much. I do randomly see bits and pieces. Someone tagged me in some article the other day saying that the Labor, it ain't easy under Sleazy or whatever guy, he has promoted or talked of an idea of having a co-ownership. So he'll put down the 40% deposit. The government will go 40% deposit in the property. You go get a loan for 60% of the property. And that way there's a 60-40 ownership. You own the lion's share of the property. The government sits there on the side. They put a deposit down and, that's a way forward. In the numbers that were crunched, it showed that when you reverse engineer the numbers, that would only allow for about 10,000 people to take up that policy if it was out. So it wouldn't be something that would be widespread or available to everybody. It would only be to a limited number of that. Just come to think about it, right? We've got the politicians coming out saying, this is what we're going to do, this is what we're going to do. But when you look down deeper, right, and you go back to the World Economic Forum page, and you go back to Klaus Schwab out there, which we've talked a fair bit about in the past, you'll see where he says we're going to have a great reset. You will own nothing and you will be happy, right? When you think about that and think about co-ownership, this is less and less, right? People are whinging now that they can't afford a property. What about when they can't afford to buy the whole property and only have a slither of the property, right? But that is great, right? For the investors out there, the people that are, in the market already, the people that are getting in the market, the people that are building up their position in the market. I'm sure I'd probably have some coloured hair people that are, saying that what I'm saying is bad and, I should be crucified and I'm taking properties out of the market for the rest of the population. It's not to do with someone buying too many properties. It's not with investors. They say it's investors. They say it's the politicians. They say it is the retirees. They say it's the Gen Y that eat too much avocado and toast. That's the thing about these campaigns, right? They are trying to divide and conquer humans and turn each human against each other by dividing and conquering, right? You've got this person saying it's this one saying it's this one. But I've always been very clear, it's not the government, it's nothing to do with any of it, it's the central banks. And I don't see anyone out there questioning in the public arena the central banks and what they're doing to these property markets to inflate it. So if we are now stuck at a position where property prices can't go up, how do we keep inflating the bubble, right? Is the property market in a bubble? Is it not? I don't believe so. I believe that, the monetary system is in a bubble. We've got the death of our currency, which we'll get on to a little bit later on this evening. But I see this as another Ponzi scheme that they can introduce. The reason why properties went up in the last 2 years, everyone's like, oh, it's because, migrants are coming in the country, prices are rising. These are all the stories we've heard. We've heard these excuses, but, there was no migrants for the last 2 years. But now it's first home buyers, right? What it was for the last 2 years is that you've dropped interest rates so low, you've handed out so many government grants and stimulus packages to expand this market that's already there. There's got to be winners, there's got to be losers. But reality is that if the property market starts cracking, then every industry is going to start dying and every part of the economy will turn into a recession. So it's really fun, right? I'm excited to see this right now, right? It is, there'll be people saying, it's going to be, you vote, Liberal, you're going to get good economy, right? I've looked at Liberals' ads actually, and it's humorous, right? Because they go, oh, when Labor were in, the cost of electricity was gone up much higher, and the cost of this has gone up. I'm thinking the worst economy that any of us that are watching this has probably seen has occurred in the last 2 years, right? The last 3 years. That's not saying, who's controlling this, right? The politicians have zero control in the economy. They are given budgets from their minders and their keepers, which are the central banks and the lobbyist groups and all those sorts of areas. So when we look at, what is going to be from, people being able to get into the housing market, right? There'll always be a bigger scheme, right? People say, oh, when my parents were younger, they got into a property for $2,000, $3,000. Well, they might have been buying a property for $5,000, $10,000, whatever. They might have been on $500 a year or $1,000 a year. One of you could go and buy a handbag for more money than what my parents would have earned 50 years ago. One of you might go and spend more on a dinner this weekend than what my parents would have earned 50 years ago. And, that could be your parents or your grandparents. 50 years ago, the wage bought nothing, right? The only way that everything's been expanded is due to manipulation of currency that's out there, i.e. the dollars that we are using, and it is going to zero. And that is why we have seen interest rate changes today. Going on to the next article, which is this one here, which is from the Sydney Morning Herald. All of these articles are just political agendas, and really no one can control this, right? No one can control it. They've got to go and borrow more money and create it into existence. The money never existed. They print the money, there's more money sloshing around, it finds hidey holes. You take that money and the liquidity out of the system, then you have deflation, you have a recession. And we will have a very big recession very quickly, right? I've talked about it for many, many years. Those of you that have just been watching me recently, I talk about great times and booms and hyperinflation, all that sort of stuff. I've talked about the global financial depression for many, many years. I said it would happen in 2018/2019, which it did. We saw an alleged illness that went out there and plagued the earth. And every country had to roll out policies and procedures to expand their economies and inflate their monetary supply to try and avoid a massive recession/depression. Suddenly that disappeared, and now we've got inflation. They're trying to cap that. However, by them just tweaking a few things like they're doing at the moment and making, small changes, it's going to have a massive impact into the future of, where things go. I'll get onto that very shortly. But just looking at this article here, if you're thinking about Australia's future, care about declining home ownership. The most thought-provoking contribution I've heard so far in this utterly dumbed-down election campaign is from a barrister, Gray Connolly, saying the big issue we should be debating is housing and intergenerational wealth. Connolly speaks as a self-proclaimed Red Troy on ABC's, there we go, ABC, National's Religion and Ethics Report. Red Tories, he says, are people on political right who have more traditional view of what they are trying to achieve. They're true conservatives trying to conserve the institutions and practice that have given us the way of life we value. I can't even read these articles. My team asked me to talk about these articles. They're useless, right? Because they're just going to be propaganda for, is it this one or this one? It's like when the election comes around, they can, create a divide there for people to, start dividing themselves. Oh, it's because of you guys. It's because of you guys. And take the eye off the actual problem that is out there. And the problem that is out there is manipulation of our currency. So on that note, there's another article here, which is out. Is that from today? Yeah, I think that's from today. And yeah, I'm going to get just straight into interest rates, right? Like the political forefront, you can think you're going to vote for one, avatar over another, but you're going to end up with the same thing, right? We've had in the last 4 years, we've had more socialist programs than ever beforehand. We've had more government spending. The country's in $1 trillion worth of debt today, which it wasn't into 4 years ago or 3 years ago or even 2 years ago. So, vote as you wish, who cares about that? The reality is no politician, no government, no political party is going to care about your own financial future. You have to take advantage and consideration of your own financial position in life. So getting on to important stuff here, I want to share with you two charts. One here is, this was taken this morning, which was the yield, the 30-day interbank yield, cash rate future yield. So this here is a chart that I've been looking at for many years. You can look it up on Google, which is the ASX 30-day interbank cash rate futures implied yield curve. This is very, very important. It is always predicted how my interest rates views come to you guys, right? I've been correct on my interest rate cuts to the day for decades, right? So looking at that, this changed in February or March 2020 when they dropped interest rates to the lowest point ever, which has been at for 2 years at 10 basis points, which is 10% of 1%. So this here in the past would always look backwards, like it looks like, this is a high point and the interest rates are going to come down. But here we are at where we are today, and it had a potential to double from 10 basis points to 20 basis points. So that's an interesting perspective. And then after that, it would go to 50 basis points, which is 0.5%, and then 90 basis points, 160, 190, 230, 2.36, 2.5%. So by December, they're predicting interest rates at 2.565%. So that's where it should be. This had always worked up until February 2020, all right? And then today, this was taken this morning. This is it this afternoon. So it's now saying that interest rates in December will be almost 3%. And, as we can see here, it's now 28 basis points. So it's predicting another rate rise next month of another, 0.25%. And the month after, it's saying another 0.5% rate rise. And August, it will be at 1.5%. Now, the media is going to predict a lot of things around this, right? They've got all their experts and their, people that are out there commentating in the marketplace. But reality is we need to go and take a deep dive into really how the economy works. And I would love someone to find some stats around this, because this is the reality of these interest rate rises, right? If interest rates go up to 2%, right, most of you watching won't have a job. If interest rates go up to 2%, a lot of people will go bankrupt. That's just taken out debt, right? So you'd be right to think that the economy would completely and utterly crash. I've got here on our own Zinger Finance website the article that came out from the RBA decision, so you can find the information on Zinger Finance website just here, which is talking about the cash rate now sitting at 0.25%, up 0.25%, which is now at 0.35. I want to take a deep dive, right? We go into these articles, right? This just got printed out for my staff. You got the election. Let's just look at what the news has to say, right? More rate rises to come. Full-blown cost of living crisis. Labor responds to interest rate increase. Labor's shadow treasurer Jim Chalmers says interest rate hike is a part of a full-blown cost of living crisis. This interest rate decision day will have a big impact on household budgets of millions of Australians. That could probably be the most truest form of feedback ever from a politician. That's from some Labor dude. The repayments on a new fixed loan of $595,000 would now be about $124 per month more, while a standard variable loan would be about $63 per month more. It's a very serious development in the economy. There hasn't been an interest rate rise in almost 12 years. So just remember that, guys. Last interest rate rise was in the year 2010. They did quickly reverse the last interest rate rises. So you can go to the RBA website, have a look at the yields over the course of the last 10 years, 20 years, 30 years, whatnot. And you will see every time interest rates have gone up and have come back down. So in here it says, today Scott Morrison asked that would Labor not have him do, well, Labor wouldn't have had him waste $20 billion on JobKeeper on businesses that were already profitable if it didn't need it. Labor would have him $5.5 billion on submarines. It's all political gaffer. Every time you go to the news, it's going to have that. So I'm just going to disregard of what we're going to talk about on that front and get to the real numbers, and pull your stats wherever you want. You can listen to the media. Are they going to be right? You can either listen to the TV or do your own research and make your own decisions and have calculated decisions on that front. So I want to look at just basics, right? And let's just look at the economy. And this is where I'll leave a little note for my editor to cut this out and make a short video for us. So looking at a thing called a bank bill swap rate. I was talking to one of my investors the other day, and they were talking about a facility that they had called a B.Invested. So it's called a bank bill swap rate. So for those of you that are in business or economics, sort of understand that there's a thing called a B.Invested. Everyone is used to using their mortgage, right? Their mortgage is based on a product that's been created for the bank, and they lend to you, and they've got salespeople, which is the bank manager and all that sort of stuff, to get you that interest rate. So it could be 2.5%, could be 3.5%, could be 4-5%, which is what the bank would charge you for a loan. So that is what I think everybody's concerned about, right? Every bit of the news is about these people's home loans going up, and that's what people are focusing on, right? So I want to go to the next argument, right? Let's just park that to the side. How many people, like, let's say that there's a $10 trillion in the country, right? $100 trillion worth of currency out there, debt and whatnot. The question I ask everybody is, what percentage of debt is based on home loans, and what percentage would be based on commercial lending, right? I.e., Coles, Woolworths, Westfields, McDonald's, Caltex service station, Telstra. What other things do we have around here? I've got some hair gel because I didn't have gel in my hair. Schwarzkopf, whatever companies, right? Who makes this? The Billow Boss, whoever makes the highlighter, whoever makes whatever we use on a daily basis, right? All of those companies, right, have debt, right? Let's go take it a step further. let's say that we've got some road works going on at the moment. Let's say someone's building a kilometre of road, and let's assume that that kilometre of road costs $1 million to be built. That kilometre of road would be shipped off to a contractor, which would build it. The contractor would be responsible for the machinery, the digging up the road and laying the asphalt, all that machinery, all that stuff. So who owns all that stuff, right? Do they own it cash, or is it created with a loan, right? So what percentage of businesses would have equipment finance and all those sorts of things, and what sort of people would have a home loan? I would assume that most people just look at their mortgages because they're like, the mortgage is everyone's going to die with their mortgages, not realizing that mortgages only represent maybe 30%, maybe 50% of the economy. What about the other half, right? Let's go to businesses, and that's where I want to focus on for the moment. Businesses have debt. So if interest rate goes up, then no one has money to spend. No one has money to spend, we start having a recession. Businesses aren't making as much money. Businesses aren't making as much money now because their cost of employment has gone up, their cost of fixed goods have gone up, their cost of importing's gone up, the cost of everything has gone up for them. Now imagine that these businesses have debt. Now let's assume that the government is a business, and the government gets their money very differently than you and I would. They would get it purchased via bonds, right? The bonds was a rate which is, that are out there. So let's assume that the government was getting treasury bonds, whatever it is. Let's say they were paying 10 basis points. They're paying the same as the cash rate. Let's say they were paying 50 basis points, whatever it may be. Interest rates going up means that today, if someone had a cash rate of, a return at, they were paying 0.5% for their interest, they were paying 0.25% for the interest bill has gone up 50 or 100% in one day. So imagine a business which is struggling. They've had to put the prices of everything up to try and cover it, which is causing inflation already. And now you add extra costs, which have to be passed on to the consumer, or the business dies. So we will have an issue here, right? I hope you can understand and following along with where I'm going here. If a business is taking on debt and they're getting the debt much cheaper than what you would get as a home buyer, that debt could have gone up 100% today, could have gone up 50%, could have gone up 30%. Whatever that is, the cost to that business, which is a majority of the business's revenue out there, I would imagine, has now potentially doubled. Now, if you stack all these rate hikes that we are allegedly projecting here, and you stack it up for this month, but let's just go 6 months down the track and say that the interest rate is now 2%, right? 2% in October. Between September and October, we'll be at 2% interest rate at the RBA. So assuming that a business has just seen the interest rate go up from 0.1% to 2%, right? 10 basis points to 200 basis points. That's gone up 20 times in 4 months, right? Now, the bank would add their premium to it. So how BBSW works is having the swap rate is that they would say, okay, the bank would take a premium of 1%. They might get $1 billion. They might get $500 million. And they will go, okay, we will lend this to you $1 billion at, the rate's currently 10 basis points. We'll add 1% on it. Your interest rate's 1.1%. Now, the business as of tomorrow, their rate is now 1.35%. So going up 25% overnight, right? And then next month it goes up another 25 basis points, and it's gone up 50% in a month, right? And then in 2 months, it goes up to 2%. Add that extra 1% on. It was 1% before, now it's 3%. The business is now paying a lot more for their money. And we're talking billions and billions of dollars, which all these people, which have gone in and taken up those 250 grand loans, have bought cars under their businesses, all those things. You see, when you buy a house at 3% loan and it goes up 0.25%, who cares, right? It's gone up, 25 basis points. It's gone up 0.25%. It's gone up 1/10 of, the value, right? It goes up 5 times. It might go up to 50% up. But if we're looking at these businesses with their facilities, which are different, their cost now has gone up so much. Who's going to wear that cost? Is the business going to go bankrupt? We've got less people buying because they've got less money. We've got higher costs to the businesses because they're importing, petrols. Yeah, okay, you go to the pump, you pull some petrol out of the pump. The petrol might be a bit cheaper because the government's taken a little bit less tax. But China isn't doing that. America's not doing that. England's not doing that. India's not doing that. So when those items get shipped through the shipping, routes they go, and all the petrol and taxes, everyone's still collecting their taxes on there. The petrol hasn't become any cheaper. The oil's not any cheaper. So that bill, you might feel a little bit cheaper by saving $20, but the cost of your next lounge, your cost of your next TV, the cost of whatever the shop is going to sell you is gone up astronomical. So my point being is that there's a bigger problem here, right? And this isn't anything that Liberal can fix. It's nothing that Labor can fix. The media is, if you think about who owns these things, right? If you owe someone money, they own you. Would that be fair to say, right? You are their bitch, right? So if the government owes debt of $1 trillion, bigger than ever before, right? The Keating government had a $98 billion debt, and now we've got $1 trillion debt. It's 10 times higher than the recession we were meant to have in 1992, right? 30 years ago. And if we look at the level of debt, who owns the government really? Who owns the nation? It is the central banks. If you look at the media and the broadcast outlets, are they going to sit there and tell you the truth? They're just going to sit there and go, well, it's this one over here, it's this one over here. You kids go and fight about that. We know what's really going on in the back room. So on that note, when we look back, there's a lot of people scared. There's a lot of people going, oh, how high are they going to go? This here used to work. It may look like it worked today. It will be interesting to see how that pans out over the next couple of months. But one thing is for sure, right? Mark my words on it. They increase the interest rates. It's going to have a bigger problem out there than anyone could have ever expected. These interest rates, these stimulus packages, there's already an issue in the markets, right? And I'm not talking about the property market out there. Some markets are still going up, right? Like losing deals left, right, and center out there. Some markets are a little bit soft out there. People are overstretched. Those markets were in bubbles beforehand. So, no doubtedly they're, doing their thing. But the markets, if we go and look at the stock market, we go look at the crypto market, we go look at all the financial markets around the world, whichever financial market you want to look at, which market is growing? They are all going down in a retraction at the moment. So when we add in their extra costs, right, and we start looking at what's happening on a global scale, we need to question, okay, we've got some inflation here, like 5.1% inflation at the moment, that is. But I don't know what's gone up by 5% last year. Was it your car? Was it your food? Was it your petrol? Everything's gone up by a lot more than 5%. So imagine a business having to give higher wages now. They've got less people buying stuff. The cost of goods is rising. What is going to happen to those businesses? Adding on the extra pressure from that. Will you have a job? So when you combine increased cost of spending, recession, lack of jobs, and those jobs will disappear and less money floating around, what's that really going to do with the government, with the environment, sorry. We saw the government come out as like the, oh yeah, we're going to give all these things away, right? Money, yeah, make it rain for the last 2 years. The lights turned on, the music has stopped, everyone's looked for a chair, there's no chair to sit down. Nothing's giving a return, right? Things are already falling, right? Markets are falling globally before any sort of monetary tightening, right? We're going through a quantitative tightening period at the moment. We've been going through a quantitative easing period beforehand. So less currency going out into circulation, if not taking that currency back, is a recipe for disaster. So we've seen them print money. We've seen them create money out of thin air. What's going to happen now? They put all this money in the system. They gave all these stimulus packages away to everybody in order to stop a recession. I always said, and I did a series of these videos in front of a whiteboard in March 2020, where I talked about what would happen. I said we would go to negative interest rates, and we should be at negative interest rates, but we didn't end up getting negative interest rates. So the system is designed for negative interest rates now. So it would be pretty easy for them to flick a switch and go, well, look, this isn't working. We've had a big crash, so we're going to drop interest rates down now. And I said from my mentoring program back in 2017 or 18, which I put out there, I think it's 2018, May 2018 was my mentoring program. That was the date. That we would see the next series of recessions going through the 2020s, that we would see a recession. They would either have to do one of two things. They will have to print a lot of money to stop that recession, which will cause hyperinflation, or they would have to do nothing and let a big depression happen, which caused the global financial depression. Ultimately, either way that they go, everybody's going to be screwed. They're either going to be paying too much for everything, or the whole system will fold. We have seen the first chapter of that system, right? They need to try and stop that from occurring. What they're doing now is going to cause so much chaos, right? I don't believe that they'll be able to get it past 0.5% rate hike. They might push it up by 1%. Whatever they do with the interest rate increasing out there, with their change in monetary policy and the direction in their policy, that is going to cause massive problems. You think it's going to cause a problem in the property market? Possibly, right? People are out there scared. They watch the news, right? People out there watched the news last year. Lots of people didn't watch the news, right? If you're going to go and watch the news, go watch it and buy into and sing la 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 with the Smurfs, right? Or have a brain, think about how the system's going to work, come to your own conclusion and make decisions based upon that. Because I'm sure as fuck confident that their decisions that they're trying to make is going to cause a bigger problem. The cure, as I said in 2020, going back to the March 2020 videos that I did, I said the problem, the real depression will not be in the situation at hand that we had in 2020. The real problem will be from the cure, right? It's the tablets that's the problem. It's not the problem that we were faced with back then. We have a very, very, very serious and very big problem here in 2022. And it might be hard to take me serious when I have a smile on my face because I'm just excited by what's happening out there, right? I'm going to have everybody, as I said beforehand, there'll be a fire. People will be running out of fear, pandemonium. Get me out, right? And then people will be sitting there crying because they're just frozen, fear. And there'll be people that are smart, calculating the room, thinking I could hide in the fire stairs for 4 hours until the fireys come. They'll be able to pick up all the wallets, rings, and watches on the ground, all the belongings everyone's left, right? Do I think there's going to be a crash? No, right? I think some people are going to be completely and utterly fucked. But do I think there's going to be a crash? Absolutely not. There could be a crash, and that crash would be in every single market, right? And then they're going to have to return this, unwind it. Every time they drop interest rates, they need to drop them, 1%, 2%, 3%, 4%. Interest rates never get back to their previous all-time highs. They always have new lower lows and lower highs. So we've been sitting at 1.5% interest rate, 150 basis points for many, many years. It's been about 6 years now, 1.5 or less. So let's assume that's your base level there. Interest rates get back to 1.5%. There's double the amount of debt floating around in the economy, right? Just think about it. There's more debt than ever beforehand. People couldn't pay for it beforehand. How are they going to be paying for it when it's at 1.5% at the bank, right? There's a lot of people paying a lot of different debt in a lot of different instruments. You think that you're good with your 3%, 4% mortgages out there. There's people out there paying 20% interest on credit cards. There's people out there paying 10% on cars. There's developers out there paying 10% interest on their loans they have. There's people out there paying 0.5% for their debt in the millions. There's people out there paying 1% for their debt in their hundreds of millions. So looking at the issue that is at hand, it's much more deeper than a property market. Now let's go on and think about if you are one of the poor sods which just went and bought a house for $1.5 million no eaves on the house on a 200 square meter block. Cost of goods to rebuild that house, it's going to go up anyway. You're going to be okay. You're going to be okay through this, but it's holding on, right? How could someone pay an extra 1% on their already, they're hocked to the hill? Those articles that we're watching, right? The young Australians giving up on their property dreams, right? How many first home buyers have gone out there and bought into the house and land package, right? We won't see a property crash today, right? We'll see a softening of the market. Where we'll really start seeing problems is if the market steps back by 5%, which is pretty common. It happens in property cycles. And then once it steps back by 5%, we've got all these people at $1.5 million properties that they can't settle on those properties. And we'll start having, bang, 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 bang sort of effect. The people that will be pretty well off will be the people that have bought low risk assets with high rental returns, because if you bought a property at 200 grand, you got a loan at it for 150 grand. 150 grand at 1% interest rate is only $1,500 a year. If you had 10 of them, it might cost you 15 grand a year extra. You just bump your rents up, right? If the interest rate goes up by 0.25%, on 150k is only $375. So looking at, the markets, you've got to look at where the issue's going to be. Where will the government need to come in and intervene? Which is the government's the middle management. There's a lot of higher ranks than the government. And you'll have to see the central banks come in and try and build a new package and a new bullshit Ponzi scheme to support and push up all of these markets. So a lot of people don't realize, I was talking to someone the other day and they said that builders, right? Builders are going broke. There's one building company out there apparently has like 500 or 1,000 staff. They employed all these staff and they're now getting grants from, different places, the government or whatever. The staff that they employ need to go to some sort of training package. They get $28,000 for employing a staff member, right? If you're a business not getting that $28,000, well then you're at a disadvantage to that company, right? You've got all these packages that are being done in the back end of the businesses to keep bankrupted businesses afloat, right? They're stock listed companies. They're the companies that were screwed beforehand. If the company blows up, there's no staff. Those staff have no wages. That becomes a burden. The companies blow up, all these things. So they're kept together with grants and all these sorts of things. So, yeah. I forgot what I was going to say. There was something that I was going to say. It was a big, juicy thing, and I just forgotten it as I was saying it, right? But we've got, massive issues out there. These companies are going to have massive problems with their as we go into a recession, if we do. My personal thoughts, views, and take on what is happening. Firstly, who cares who you vote for? Your government ain't going to save you, right? If you want to save yourself, you need to educate yourself and make educated, calculated decisions to make sure that you're going to be protecting yourself moving forward. Secondly, I think that we will see volatility out there. That is an opportunity, right? I love when I see volatility, right? A lot of people think Nathan's two-dimensional. He buys properties. He's a buyer's agent. He, owns motels, whatever, right? But I do lots of things in business. I own lots of businesses, right? There's lots of these cupboards behind me are full of company files and documents and all different things of entities that I own. And I love when volatility is out there because there's opportunities to go for the ones that are scared, the weak hands. In a market where you've got strong hands, there's opportunity. Where you've got weak hands, they hand over things and they get scared. So make sure you have EQ, emotional intelligence, and make educated decisions that are very, very calculated. If we go into a recession, the bigger the problem that is created today is going to be, the bigger the opportunity at the other side. Whether we have a crash, which causes a big recession, which is back to the GFD that we're meant to have. They've just kicked 2018's recession into 2022, or whether they have to treat the problem that's at hand and they cut interest rates, right, I still believe we will see interest rate cuts, right? We may see them go up. It will not get past these levels, right? At 2.3%, everyone's screwed, right? Everyone's screwed. It will not get past that. So when it does get to that level, they're going to need to change course, and they'll be like, shit, we had CPI at 5.1%, and they get on the phone to their masters, and they're like, oh, CPI was 5.1%. Oh yeah, Frydenberg. Oh, what do we do? Oh yeah, well now it's negative 6% because we're in a fucking depression. What do we do? Oh, put on the printing press. Let's drop interest rates. Let's do this. Let's get the stimulus packages out. Let's do JobKeeper for 50 grand for everyone. Oh fuck it. Let's put JobKeeper at 100 grand a year for people. Let's give every employer $100,000 so you can go and find some staff, employ them. Just get them money into their bank account so they can pay their mortgage, they can get themselves back to order, they can pay for the food, because the food bill used to be $300 a week, now up to fucking $800 a week, and they're all going broke because of it. That's the conversations that will be happening in the back end, and the bigger the cherry's going to be as we head through to hyperinflation. I'm not looking at a 2-month thing or a 3-month thing or a 6-month thing or a 12-month thing. As an investor, as a homeowner, you'd be stupid to be thinking that, things can't change, right? For all of my investors that I buy properties for, whenever I send you those properties, have a look at them, right? I calculate interest rates based on a 4% interest rate, right? You're probably getting 2%, 3%, 3.5%, whatever it is. There's a buffer. You want to be factoring in that there's a bit of a buffer there so you're not so to the wall. You want to be minimizing risk. The opportunity I see is that if there's a pressure put in the market. There's already started to be a rental pressure as well, right? Imagine you sprinkle some inflation across the rents, right? And people go, well, interest rates have gone up, so I had to put rent up by $20, right? Which would be a fair comment. So if you're putting your rent up on your property that's 1.5 million by $50, well, good on you. Your interest rate's gone up a lot higher than that. I haven't even calculated that, but just assuming. If you have a 200 grand or a 300 grand property and you put your rent up by $50 to cover some interest rate costs, that's positive cash flow to you. So it just depends. Like, be smart. Your property investing should be as a business. You should treat it like a business. I've always said it from day one. Treat your investing like a business. Numbers don't lie. Understand what's going out there. You're not going to get deep level of knowledge from watching the TV, right? You're not getting it from watching that. You have to do your research, do calculations, go seeking, go look for the knowledge off the internet. There is a lot of it out there. There's a lot of bullshit too, right? But if you're looking at stats and facts and figures and reverse engineering and sort of working out scenarios of what would happen if we did this, what would happen if we did that, what would be the situation. And I think you'll give yourself a lot more confidence in the nighttime when you go to sleep to go, wow, things aren't too bad. But my view over the whole thing, am I concerned? No. There might be a glitch in the market for a little bit, but I'm very confident that we would see a interest rate reduction, and I'll be the first one to call that we're going to see reductions. It could be 6 months, could be 12 months, could be 18 months, could be 24 months, but I am still confident that we will see negative interest rates, right? Even though we're having a rate rise today, I'm confident we will see negative interest rates in our lifetimes, and as long as you're not going to die in the next 2 years, should see negative interest rates in that period of time, and we will see interest rates go down. That chart will destroy everything, right? The right thing, if the masters above were right and they were good people and they weren't robbing and extorting and controlling and doing bad things to people, interest rates should be 5% at the RBA before anything, right? But we've had to keep this Ponzi scheme alive for a very long time, and the only way we can is with a debt-fueled orgy, right? And we've got cheap credit, cheap debt, and everybody's getting amongst it, and the lights are on. Everyone's going to have a hangover. A lot of people will, but it is much bigger than that. Hope you guys can understand and see and start looking down those rabbit holes. What would happen if we go and pull the profit and loss of any stock listed company and start adding in higher costs of capital, higher bond yields, right? And then when we take that, talking about the bond yields, right, go look at all the stock markets and calculate all the businesses out there and think, how much does one of those tractors, right? Maybe I'm autistic by thinking of these things when I'm going down the road, looking at a construction site or roadworks, right? I think to myself, how much would one of those tractors or those machineries, the earth-moving machineries cost? They're hundreds of thousands. They're millions of dollars. Do you think when you see a truck with a Woolworths sticker on the side of it driving down you're at the traffic lights and you're like, oh, fuck, there's a big truck here beside me, better overtake it, right? That's what most people think. I think, how much would one of those fuckers cost, right? How many of them would Woolworths own? Do they even own them? Do Woolworths own them, or do they have an outsourced company, which is an off-balance sheet ledger transaction to keep their company safe, right? This is going deep diving into businesses here, right? Would Woolworths own their trucks, or would they have a company which is an off-balance sheet company that would own those vehicles? So if something was to go wrong, they would not blow up their core business of food and delivery services. And I believe, people correct me if I'm wrong, some people that work in there, I know in my community of clients that I deal with, they're in logistics and whatnot, and they say that there's a lot of money in that, and like some companies will, like, could be, I don't know if it's Woolworths or Coles, one of them delivers to the other one. They have the company that, they're different companies, right? How much do those trucks cost? Do they buy them cash? Do they buy them with a loan? Do they go and raise capital from bonds? If those bonds have gone up, well, the cost of that business's funding's gone up. Now that puts an extra cost on your food getting delivered to you, which then Woolworths has to pass on to you, right? Start seeing the point here. The cost of funding, it's not you as the property owner that's in trouble. The news is going to make it sound like, oh, it's this Liberal Party, Labor Party, all that sort of crap. The whole system is screwed, right? There's people much bigger and bigger problems than you and I with an interest rate increase, right? You should have expected that, interest rates can move up. But are they going to start forever? They're going to have to reduce them, right? Because as we can see today, with a 10 basis points gone up to 35 basis points, the cash rate has gone up 25 times, right? It's gone up from 10 to 35, right? That's 200, 250, 300, calculators not out, percent increase. It's tripled. It's nearly quadrupled. It started off today at 10. Now it's up to 35, which is almost 40. It's gone up 3 to 4 times in one day, right? Let's just break that down. It's gone up 3 to 4 times in a day. It goes up again next month. It's gone up from 35 to 60. It's doubled in another day, right? What is that impact going to do to the holders of that debt? Where's the flow-on effect going to be? You go and look at the bond yields. I don't have the chart for that this week. For those of you that weren't watching last week, I talked about it last week. In every country that's put up, go look at the bond yields actually. If you guys want to see some fun and see where the signs are, when you have an inverted yield curve, you have a recession on your hands. It's not a red light, it's imminent, right? It's all the liquidity sucking out of the system, right? Watch the bond yields. If you've got a 3 month that's paying more than a 6 month and a 6 month that's paying more than a 12 month, and so on and so forth, the yield curve, the longer you put your money away into a bond, it goes down lower and lower, right? That is the telltale sign of recession. So go and do some research around inverted yield curves. Look up the Australian bond rates and overlap them, right? Maybe go and look up the 3 year, the 5 year, the 10 year, the 3 month, the 1 month, the 2 month, 6 month, whatever, and look up all those bonds and then take a screenshot of what they are today and look at them again in a month's time, and then 2 months, 3 months, 4 months, right? We're going to see a massive recession, but they can fix this overnight, right? They can turn on quantitative easing, they can give stimulus packages, they can give good things to people, right? Here's your $50, here's your $500. You've literally seen with all of these things that have occurred recently, right? Money can get to you instantly, right? I heard a story of someone at the club one day, and they were like, shit, I've got no money for drinks. And then they went and applied for a corona relief. And then instantly, like within 3 minutes, they got $1,000 or whatever the fuck it was, right? Money goes instantly to you. So they can send out payments, disaster relief payments, whatever payments they are, they can start printing them out. You're all starting to sign up for your digital wallets, got your digital identities ready, right? Ready to take the universal basic income from the government. We will see universal basic income coming in, from the governments. We will see the need to downward pressure on those interest rates. Otherwise, we're going to see a massive issue, not just in property. We're going to see, whether it's today, right, when they talk about things, right, that labour incentive that we're talking about beforehand, you'll own a house. They'll help you get into the house. They give you a leg up and help you. Oh, thank you, government. Try and jab me in the back while I'm hugging you, right? Get in you, right? We're going to see those things come into fruition. You'll own nothing and be happy. Does that mean they're going to take it away from you? No, because someone will own it. You can't just have no one owning nothing, right? Someone's got to own something that the others have to rent from and to, control the population. Work out what side it is. Are you scared because of dollars, right? The money never existed. I always tell people, the money never existed. They created it out of thin air, right? When you go to the bank today and you go get yourself a loan, the bank doesn't go, let's say, for instance, I'm buying a property, you're selling me the property, and it's $1 million, right? You're selling me a property, I'm buying it. I go to the bank, I say, hey, give me $1 million. Let's assume that it's giving me $1 million. They don't go out to the vault and say, okay, here's $1 million, give it to Nathan, he can pay this guy, right? They go out the back, they create a debt instrument, they go, oh, well, we put an IOU in the safe, and then here's your debt contract that's going to keep you for the next 30 years, Nathan. And then the guy over there just gets that $1 million that was created from thin air, right? So it's the banks that are creating this cash for these properties and for the furniture, and the house is turned into an ATM machine, right? That is where the fun part's at, right? We haven't even talked about the fact that if everyone's not using their house as an ATM machine, what happens to the retail recession out there? I give it less than 2 years and we will see rate cuts. I could be wrong, could be right. I'm pretty confident, and that's why I'm making my decisions. My decisions get me to where I am on a day-to-day basis. It's prognostication. I'm not always right, not 100% right. Sometimes it's 50% right. Sometimes I'm completely wrong, but I wouldn't sit here with the confidence telling you if I know that I'm going to be shit out of luck. A lot of people won't talk about that. They'll be sitting there with the news articles going, oh, maybe if we get an Albert Sleazy, right, we'll have, a bad economy, right? Who cares who you put there? It's going to be screwed anyway. They're going to get a call from head office, crank up the printers, force them into a digital identity, and now they've got their wallets, give them some money, they'll be happy, and, we'll come back into what to do next. We're going to have a climate crisis. We've created some issues, and, we'll create a new situation. We'll sell them solar panels for their roof and battery packs. That's what we'll do next. Wait, hang on there. Hold on the line, and we'll be back in touch shortly and give you some more stimulus packs to put out there. That's what it's like. On that note, guys, it's my thoughts. I'm going to go down to your questions, going to answer some questions for the next couple of minutes. I'm going to square this off before an hour. Make sure also, a lot of people may be asking me what's happening. I have a webinar tomorrow. Night. It is with Rose Renouf from Zinger Finance. She heads up my finance company and answering lots of questions. It'll be slideshows about finance, loan structures, loan products, how to get loans, what to do with loans, and it's a very, very deep dive next week. So tomorrow, sorry. So make sure that the notes are in the comment section. The notes are in the description. If you're not on the registration yet, make sure you register for it, and we'll see you there tomorrow. But I'm gonna just go through some of your questions here, and what are we here? La with the Smurfs, those little Ginny Smurfs that they put on there. Now, Stan, would you freeze your interest rates on existing property now, or have I missed the deadline? None of my loans are fixed, and I'm pretty fine with that. Fuck, bro, the banks are going to hate you big time. You're killing their business. Well, I'm actually probably a good proponent. They should actually give me a a fucking plaque, right? Like, do you know how YouTube give out those plaques, a silver one, a gold one, and whatnot? They should give me a plaque, because no one talks about debt like this. And I'm a big proponent of debt. I love debt. Give me debt, I'll take it. Give me your terms, I'll take the debt. So yeah, with it, Gemma asked, what are you invested? What can our investors look forward to? Nathan, it's not all doom and gloom? Question mark. I don't want it to be doom and gloom, right? I'm just saying it's a fact. A lot of people, there's a lot of people. What do we got here? A lot of people are fearful over the market. I'm very comfortable with it. I see a lot of opportunity out there. There'll be opportunities from two different angles. One, there's a ceiling of how high they can make this. Two, if you set yourself up right, it shouldn't even affect you. Shouldn't lose any sleep, a minute of your day over it. The third thing is, just the opportunities, right? Firstly, the opportunities for people that are scared. Thirdly, is that that the interest rates will have to come back down. The bigger that they cause this issue right now, the bigger the treatment is going to be, and it's going to cause massive inflation. So I never said we're going to see everything just go up overnight. I said it would start in around 3 years. We're getting a taste of hyperinflation now. The inflation coming forward, we're going to see a slight level of deflation, stagflation, whatever you want to call it. There'll be a bit of inconsistencies in the market, but there will be massive seismic shocks to our business world out there. The business world is where the issues lay, and they will have to reverse course in their monetary policy. Attitude of positivity. Goodbye, Matrix. If you need a rental review, contact Blink Queensland. So Michelle's online. If you have a rental property in Queensland, Michelle and the team in Queensland, we've got staff in all locations. Doesn't matter if you're at the tip of Cape York or in anywhere along the coastline, anywhere inland. We've been putting up rents in Queensland between 50 and about $150 a week over the last 6 months, 12 months. So if you need help, reach out to us. We can help you on that. What else we got here? About to book my first appointment. Look forward to chatting to you when I get a chance to, when we get the chance to chat to you. Adrian here said semi-trailers can be in the hundreds of thousands of dollars. Farm machinery can be over 250K. We're not talking about, like, if you just think about it, right? Like a shitty car now is 50K, right? We're talking about thick steel for the diggers and all of that. Pretty sure Woolworths owns the whole supply chain. It's the interesting part about it. You nearly did an Albo, but corrected yourself 0.235. Yeah, exactly. Should I fix my interest rate? So confused on this. Kat, tonight I want to just talk about broad sort of topics. Tomorrow we'll have a deep dive. I'll have my personal broker of almost 20 years, Rose Renouf, on a proper slideshow presentation and a webinar. It is free. Check out the link in the description and in the comment box and register for the webinar tomorrow, and we'll be able to talk about that a little bit more. Is it worth fixing interest rates for a year? I'll cover off on that tomorrow's webinar. I'm not just trying to force everyone in there, but it seems like I don't want to just give everyone just a quick answer, go yeah, no. As I said, I'm not fixing anything. Should we lock in, Nathan? Once again. Daryl, I've loved to learn debt. It is working positively by setting it up right. Exactly. If you have the right strategy, the right debt strategy, the right vehicles to get you to your goals, debt can be a wonderful thing. A lot of people will take on debt for the wrong reasons, for the wrong things that they're buying. Cash flow is very important. And there's still a lot of, cool things out there to be had. So, yeah. Rumors has it Michelle Raymond is the best in the business. I would have to agree with that. How does one buy Aussie property from New Zealand? That would be an interesting topic. I did a webinar on it once, but everybody's position is different from across the other side of the divide. I do have a lot of people that do buy from New Zealand. That sounded really weird, like Dubai. A lot of people do buy properties from New Zealand in Australia, and it is a increasing trend. So if you need help, reach out to my team. Click on the link. There's a discovery session option there where you can have a bit of a chat. Speak to my finance team, and speak to my lawyers. That would be a good start. Can I change from my current property managements to you guys easily, costly? It costs nothing to change over from your existing property managed to us. I manage thousands of properties throughout Australia. We charge the same sort of price the real estate agent does. We can take care of all of that. All you need to do is give us an authority to act on your behalf. And then my team can then go and collect your property from the property manager. A lot of people actually feel that when you do change a property, you've got to wait till the end of a lease. You can change your property manager any day of the week. All you need to do is give us authority and we can act on your behalf to manage your property. And generally need about 60 days to put up the rent on your property as well. So that's our biggest thing at the moment, is putting up rents for all our investors and increasing their cash flow. Bo asked, what do you think currently the inflation rate is? Surely it's higher than 6-7%. Is it 15-20%? What are your thoughts? Bo, I think it is much greater than the 5.1% that they comment on. I call it CP lie. Beforehand, they were costing in steak as meat. Now they're costing in dog food and sausages. There is, tell me what has only gone up by 3% in the last year. Crazy. Clive Palmer says he will cap rates at 3% for 5 years. If that rates go to 4%, 60% of home buyers will fall. Exactly, and that is going to be the fun part. Get your popcorn out. It's always important to have a very solid strategy when buying a house to live in, whether building your investment portfolio, whatever it is, you need to make sure that you have a solid strategy in place. So, plan for that. If you need help defining a strategy, I think there's a link for a discovery session. Speak to my team if you're unsure of where to turn to, unsure of your next move, unsure should you fix interest rates, should you not fix interest rates. All of these questions, they're good questions to be having. Have a chat with one of my investor relations team. They're the experts. They'll put you in contact with the specific expert to talk about your specific situation. It doesn't cost to call us. It doesn't cost to have a discovery session. Reach out. I've got all the experts here, the best people in the industry. So what else do we have? Got lots of questions. We've got here, the great scamdemic here in New Zealand is now the climate change. What happened to the AIDS that we had, right? The level of AIDS that everyone was getting, the disease. I actually caught it, right? Just a fun fact for the day. I actually caught it not last week, but the last Facebook Live I did, where I had the white big brick wall at that property with the white brick wall behind it. I caught it that day. I felt a bit off and I caught it. And I didn't even get a runny nose, no cough, very fatigued, and headache to the max. And it wasn't, I thought I was going to die. Everyone said you're going to die, but I didn't. But now there's a climate change. What they're coming for is the chickens, the animals, your meat, your food. Just watch for it, right? Keep an eye out in the propaganda that's out there. They love putting these avatars, love dramatizing things, love making clickbait. That's all the media is clickbait to get you to click on and buy their agenda and then buy the advertising space. How easy would it be to change my current property management in a unit complex to you guys in Queensland? Craig, reach out to my team, flick a message over to there's a link here for a discovery session on the questions box in the description. Book a conversation for a discovery session. My team will run through how easy it is. Very easy to transfer your property from any sort of real estate agent or that to us. It's a very simple process. You need to sign a form giving us authority to act on your behalf, and then need to write a letter saying that you want to cease the use of them. You don't even need to call them and say, hey, we don't want to use you or anything like that. You don't even need to do that. You just give us authority, we take care of the rest. So it's pretty easy. Alex, how do you tell when it's time to sell? For me, it depends, right? Like if you're thinking of selling a property, why are you trying to sell it for, right? Your belief system is that the money is worth more than the property, right? I don't like selling assets. I prefer to keep all my assets. Occasionally, I will sell an asset because I just need to push some more cash somewhere else. But a lot of people are getting scared and thinking, should I sell a property? And I think that's the most ridiculous thing when people are selling their assets, trying to get cash. They think, oh, interest rates gone up 2.5%. They freak out. And they're like, you're fine holding your property when the interest rates were 1% or 1.5% higher than what they were, right? Why is anyone scared? Why? Here's the most important thing from today's comment, right? This is why I just don't, care about what the media is making of it. If you owned the property 2 years ago, you're paying 1.5% more than what you were today, right? So it can go up 6 times, right? 6 times at 25 basis points, and you will be back to where you were 2 years ago. Is it going to change your life? Should you sell off your property? You're going to be paying the government some taxes, stamp duty, the real estate agent fees, capital gains taxes, and ending up with a bit of money in your pocket, which is going to buy you less and less in the future because inflation is going to keep getting higher. So be very careful when you're thinking of selling a property. If you are thinking of selling a property, reach out to my team. I have connections with good real estate agents. If you want to sell, speak to my team. They'll put you in contact with one of the ones in your area that'll help you. But yeah, 9 times out of 10, I look at people and I'm like, why are you selling for it? It's because they've got misinformation or fear or caught up in, the propaganda that's out there. So do reach out to my team and, do think carefully before you sell the assets, because I always ask people, like, if you sell this property, will you be able to get the chance to go and buy that again, right? You might be going, oh, it could drop by 10%. Well, you've got to pay more than 10% in all the fees and charges and taxes and all that, and you won't be able to buy the asset again. So make sure you have a good strategy around that. Reach out to my team. It's free to have a discovery session, guys. It looks like there's lots of questions here. With the increase in interest rate, how long do you think rent will hit the roof? Investors need return on mortgage. Put your rents up. Reach out to us. I've got staff everywhere. If your real estate agent won't put your rent up, my team will. Daryl said, I did, mate. Blink are very skilled and know the market, very professional. Thanks, Daryl, for the vote of confidence, and really excited to be helping you. Direct contacts to the investor relation team. We're on the ground. Yep, Gemma's put there the details. Cool. Looks like there's conversations going there. Ivan, I need to reply to your text, mate, but I hope you're well, mate. And how's the renos going? Renos are going great. Never have enough hours in my day. I've got 8 big renos going on at the moment, like massive multi-million-dollar renos going on. They're going really, really cool. Cool. And what's your rental management fee? Speak to the team. It's very much in line with the real estate agents. In some areas it's cheaper, sometimes it's in line, sometimes a little bit more expensive, but it's the same as a real estate agent would be charging you. It's not like we're charging you massive, but I know my guys are getting on average about $45-50 per week extra on our properties compared to others in the market and the average real estate agent out there. Andrew said, hey champ, your thoughts on renting out your primary residence in order to reduce your costs, rent a shared home to increase borrowing power? That is a way. Like if you're getting stuck, and you need to get some extra cash flow in, rent out a room if you have to. Like a lot of people just go, oh, I'm going to sell a property, but then you're going to lose that asset. You're going to lose it forever. If you need extra cash flow, it's an option. I've done heaps of things to hustle over the years. I've never really, rented out rooms. I don't like people in my space. I like being, by myself. But it could be an option, and it'd be definitely an option. If I had to sell something or rent out a room, I'd be renting that room out before selling it. That would be another thing. So on that note, guys, just want to thank you for spending your Tuesday night with me. Sorry I've gone way over the time I wanted to. There will be more shorter than this. Today's one was a very special one because interest rates they have moved. So if you need help, follow the description in the description. Look forward to seeing you tomorrow night at my webinar. It will be with myself and Rose Renouf, who's the head of Zinger Finance, my personal broker of almost 20 years, sharing her experience, her knowledge. And when I say she's been my broker for 20 years, she's been other people's brokers for longer than that as well. So if you need help or any questions on that, come along, see you tomorrow night. It's free. Follow the description. And if you need help on anything else, reach out to my team. I'll see you back next Tuesday, and we'll catch up then. Bye for now. Keep being awesome.